This is James with WSTrades.com. I want to provide an update here on ticker EBET or Ebet. So having a nice rip on the day here, up 10.3%. You can see after the initial pump up above the 11-cent mark, they had a huge sell-off and dipped below 4 cents, but have kind of bottomed out for now and have started to make big moves higher again. So I was kind of looking through some of their SEC filings, and it looks like they defaulted on a $30 million loan, and they're in a forbearance agreement right now that's good for, I think, a couple months. Yeah, it says so. The amendment extended the forbearance date from September 15th, 2023 until October 31st, 2023. And the lender here granted them an additional revolving line of credit in the amount of $2 million. So they have actually additional debt that they have taken out here. And, this forbearance agreement has extended a couple months here out to October 31st. So this company is in deep trouble financially. They're defaulting on loans, they're taking out additional debt when they can't even pay their original debt. This company's just in real deep trouble, and they're wanting to stay on NASDAQ as well. They're going to have to do a reverse split. This company's just hemorrhaging a ton of money. Extremely risky investment. Now, if you're just looking for a short-term pump or something, let's say you bought in when it dipped below the 4-cent mark, you're up nicely now. Just realize this is a very high risk, high return investment here because they're defaulting on loans. They're taking out additional loans and additional debt when they can't even pay, the debt that they already have. So for me, seeing this big move again from 3 cents or something up to where it's at 7 cents right now, that's a big move. And they might move a little higher here. Let's see if they go and retest maybe 8, 9, 10, 11 cents again here. But as this thing continues to move higher, I think this thing's going to dump, and I think eventually it's going to go right back down to where it was, which is probably 2 or 3 cents. Because if they continue to default on their loans, they can't pay their debt, they're taking out additional debt, they keep bleeding tons of money. I'm thinking more long term, what is going to happen to the stock price here, and what is going to happen to this company. And if they do that reverse split, let's say it's a big ratio, that's just going to jack the price up and tee it up for the bears to just smash it and crush it down. We see this all the time. IDEX just did this, Ideanomics. If you go look at them, they just did a reverse split, and they have just gotten smashed after the reverse split because it really props that price back up and gives the bears more room between that current stock price and zero to just smash it into the ground. So this is just typical crappy penny stock price action here. They're in a lot of trouble financially. They become the target of retail. Retail tries to pump it to the moon. So just, if you're trying to get in on one of these pumps, just realize it's very high risk, more short-term price action. But longer term here, this company is in a lot of trouble, and it's just, they've got bankruptcy written all over them. So I'll continue to keep you updated here on ticker EBET or Ebet. Please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.